Hey guys, how's it going? It's your boy BD Investing with another portfolio reveal for the month of March, and I will also include my dividend income that I have received year to date until March and also from previous years, and I have all that in a tracker. I also have very exciting news for all you Blossom users out there. Max Gonzalez and the team are working on a better version of Blossom, especially for dividend investors, which will include a built-in dividend tracker so you can see your monthly dividends. Me and a couple other ambassadors are also on the team, including Brandon, Robin, Joey, and we are going to be testing this beta mode version of the app and fix some glitches, make improvements. This will be included in this video. I'll post a short walkthrough of the app. So let's get into it. Very exciting news, guys. Folks, this is the portfolio, the long-term portfolio. We are at $70,000. Last month we were at 67, so $3,000 growth. The personal portfolio is down a little bit, but we're still green. Don't forget, the personal is all growth stocks, so makes sense. We had a couple ups and downs. We're back in the up. And then the TFSA, same spot as last month, down 13%. A lot of volatility in the dividend stocks, especially the Canadian banks. And the crypto, all you guys want to see my crypto portfolio. This is not even my full crypto portfolio. This is just my crypto and Wealthsimple trade, but it has done very well. So far, I hold, Bitcoin as my largest position. Dodge, I just started back in Dodge. Majority of my money made in this account, which was at 14, but at one point I almost doubled it at 10,000, was made from Dogecoin alone. And then my third is Ethereum and Shiba. I just have to track it. I'll be adding more to Dodge and Bitcoin. Ethereum is kind of lagging. So yeah, that's just kind of my crypto portfolio breakdown. Good times. Now let's look at my dividend income for 2023. We are at $244. Last month I only received $111 in 2022, previously $167, and when I first started in 2020 I only received $16. This is pretty much the dividend income I received in March. We got dividend from Brookfield, RNW, Hydro One, Diversified, Royalty Income, Smart Centers, a nice $42 dividend, Pizza $17, Bancorp $24, DFN $56, another big one, and then another major one from Enbridge at $51.78. I'm using Wathica to monitor my income, so it's up to date. January $216, February $164, and in March $244.93. We are still averaging about $260 a month when you divide the annual dividend payments we get. So monthly dividend growth we have for our monthly dividend stocks and our drip strategy. So I have DFN, Pizza, Diversified Royalty, Smart Centers, RNW, and Bancorp as my monthly dividend payers, and I track all their growth from 2022. So for DFN, we started at $20, and in March we grew almost to $56, and this is just me continuously buying back shares with my monthly income. And Pizza, we see May 65 cents all the way to $17 in March, again continuously buying back the dividends. Diversified Royalty Income, just bought it in 2023 of January. We went from $6.90, $8.80, and $7. So what happened there? Well, I sold because I saw that Diversified Royalty was selling air miles. They own air miles, so it was going bankrupt. So I sold and then I bought back the dip. However, I did it before the ex-dividend date, so kind of missed out on that. Regardless, we are still in this $7. Next month we will have a higher dividend guaranteed. Smart Centers started off $16. This is one of my oldest stocks, again with DFN. $16.96 all the way to $42. More dividend growth, not as much as DFN, but Smart Centers is getting there. TransAlta Renewable started off at $2.66 all the way to $16.84. That's almost a times 8 return. Wow, 800%. And Bancorp, $10, doubled already in March, 24.53. I like this. This is going to improve just as much as DFN because it is a 16% dividend yielding stock. So lots of fun. I really love seeing the growth, especially with the monthly dividend pairs. I should make one for the quarterly, but I don't have too much fun with the quarterly dividend stocks. I mostly own the quarterly paying stocks, mostly for the capital gains, since it is rewarding when you see Enbridge and BMO and Bank of Nova Scotia grow. But yeah, guys, that's the monthly dividend payers. If you notice, my dividend income in the beginning of 2022 was kind of low over here, all right? And that is because I, made a mistake of leaving the dividend side. I sold majority of my dividend stocks, and in this month, there was a dip in the market, so I decided to buy the dip, and that was a mistake I made, right? Because the market, as you guys know, in 2022 kept going back down, and I had to retrace my steps and go back into, dividend investing. Regardless, we're back into it, and this time I'm sticking through it, because that's how I started off. In 2020, I started off as a dividend investor, and then slowly I got into tech and day trading. Although I wasn't day trading my TFSA account, I was just chasing more growth versus yield. But now I found a perfect way to do what I call is a hybrid portfolio. Okay, be asking, well, what's the hybrid strategy? And we can just take a look at the sector allocation, and this is the hybrid strategy. So this is my strategy. I want 40% in dividends, 30% in growth, 20% in passive income, and 10% in speculative stocks. So dividend stocks are your your financials, your Enbridges, your Bank of Nova Scotia. Your growth stocks are mostly tech stocks. We have Airbnb, Google. Passive income, I like to have stocks like DFN, Bancorp, RNW. Those stocks that pay you a monthly dividend stock. And for my speculative stocks, I have SoFi and ChargePoint. And the reason why I consider them in the speculative versus the growth is because these stocks, okay, they don't make they haven't been profitable, so they earn revenue, but the earnings are not there. They're still putting all their money towards their growth. So yeah, those are my speculative. So let's see if we are up to date so far. So our dividends are close. We are way too much in growth. We need some improvement in the passive income and the speculative. But so far, I'm liking the portfolio right now, even though it doesn't follow strictly. I do want a little bit more growth this year as much as dividends, just because it's a bear market, and we want to take advantage of that dip. Now, this is my sector allocation. And if you already follow me on Blossom, you'll probably see I'm mostly into the tech. And then we have the financials. This is mostly because of DFN and because I've also been buying a lot of BMO stocks, so that kind of boosted the financials. Our ETFs is our S&P 500 ETFs. Consumer cyclical, I'm adding the Tesla dividend stock in there. Also, we have Pizza and diversified royalty income in the consumer cyclical section. In our utilities, I just added Hydro One stock, right here. We just added it to the portfolio. And we also have Brookfield Renewables, which has been, where is it, right here, Brookfield Renewable, which has actually been, I was down negative 20% at one point, and now it has I'm only down about 1%. So a lot of recovery there, and that kind of boosted the utilities. And also Algonquin Utilities, and we also have RNW, which is TransDelta Renewable. For REITs, I only hold SRU stock. That's the only stock, and it is one of my largest positions, only because I don't really understand real estate too much, and SRU is pretty much a no-brainer for me because they own a bunch of Walmart properties. They're building a lot of condos down in Vaughan in here in Toronto, and these are some of the things I see and I can understand. So that is why I went with Smart Centers. And besides, the Walmarts are full, so that's a great way for me to tell if my SRU stock is in danger or not. So yeah, for my REITs, I only stick to one real estate stock. And For energy, I only own Enbridge, one of my favorite stocks, 7% dividend. Enbridge is the only stock that I own when it comes to my energy side of my portfolio. And then for communication services, I only own Telus, which is kind of new to my portfolio. I owned it back in 2020, 2021, but sold it. And where is Mr. Telus? Right here. And I also have Turkcell, the Turkish cell phone stock. That stock has been very volatile, and I kind of trimmed that down a lot just because I wanted to buy Amazon and all these other tech stocks since I'm seeing a shift in the market change, right? But yeah, that's pretty much my hybrid portfolio and my allocation. You guys can choose this strategy if you want, but this is just something that works for me. Now we are going to, look at the Blossom app. So I'm going to post a video here and we can take a look. Hey, what's up, guys? Canadian stocks, BD investing. The portfolio is at $72,000. That is a lot of growth. And the dividends we're looking at, in March, we received about $222 in dividends. Although we are still on track to receive $262 a month when you combine our entire annual dividends. This is the dividend portfolio, and these are just some of the dividends I received this month. And these are the stocks that I bought this month. I bought BMO, I invested in Bancorp, Alibaba, Square, YTSL, which is a Tesla dividend stock that pays about 15% in dividends. Also Enbridge, bought more block again, Telus, Amazon. I decided to finally buy Algonquin, reduce. I'm down 30% on that. And of course, I had to buy VSP, which is the S&P 500 ETF. You can see my portfolio on Blossom. It's free. Link in my bio. Download it now and you can see my trades.